I think we're on the brink of an economic crisis caused by the political consequences of a push too fast, too far, on too many fronts for too many things that aren't unsustainable. Meanwhile, military spending in the US keeps growing, social spending still keeps growing. No one wants to tackle the deficit, and we have this additional problem of needing massive amounts of minerals from China on top of it all to make it all work. It doesn't fit.
On today's episode of What the Finance podcast, I have the pleasure of welcoming on Mike, or Mish, as most people know him, Shedlock, who's an investment analyst and writer of the great global economic blog called MishTalk. So, Mish, thanks so much for coming on the podcast today.
Welcome to be back on the show.
Yeah, I'm really looking forward to our conversation because it's been a bit of a whirlwind, a couple of months and I guess a year overall. It's something that seems like everything has happened. We've had multiple banking collapses. And despite that, markets just seem to keep pushing up and up and up. They're sort of not even worrying about it. So, in your perspective, what are you currently watching? And I guess, why do you think the year has performed as it has?
I'm kind of watching actually the political events, but they're not really political. They're economic. And I got into a conversation with someone on Twitter yesterday, and he said, "Well, the outcome is going to depend on the policies." So I asked him, I said, well, okay, we have Biden's push for EVs. We have Biden's regulations. We have sanctions, and we have tariffs. And he goes, well, I'm not going to get into the politics. I said, well, okay, forget about the politics of that. That's the economics of what we're doing. Is that inflationary or not? And he goes, well, I won't go into it. Well, that's kind of interesting. And I don't blame people for wanting to stay away from the politics of it all. For example, I've not talked about Hunter Biden, but the Inflation Reduction Act, Biden's push for unions, all of that stuff, Biden's push for EVs, higher minimum wages, all of that has an inflationary push. And it is what central banks are now fighting. For decades, we've had the tailwind of outsourcing, of just-in-time manufacturing, of global arbitrage on wages. All of that stuff is in reverse now. So to me, it's not appropriate to say, well, I'm not going to talk about all of this because it's politics. So politics or not, that's what's happening. In China, it's a different story. They have, they're fighting deflation now as a result of decades and decades and decades of pushing, of trying to meet GDP targets that were really unsustainable. They did it by exporting through exports, through policies that actually suppressed consumer buying in China. And they also did it through enormous property bubbles. The average person in China saved all their money in properties, some of which haven't even been built. We're now seeing a debt collapse in China. It's quite similar to the debt collapse that we saw in China, where at one point decades ago, the properties in Tokyo were valued at more than all of the properties in the United States. So those are the forces. They're economic, they're political, and they vary by nation.
Yeah, it's really interesting. So if we maybe focus on the US to start with and inflation, do you think that's specifically a political issue? Because I guess if we look at Europe, and even though it's come down in Europe, UK hasn't really come down as much. Canada and Australia, sort of inflation is still quite high. So do you think it's just political, or there are other factors that are influencing it as well?
Well, the politics leads to the economics. And there's also demographics in play. If the demographics are slowing pretty much globally, at least in the G7, but the United States, at least the population is still growing. The birth rate is plunging, but we've also have net immigration to contrast with China. Their population, like Japan, is just starting to decline here now. So, those are the demographic factors. The demographic factors are actually deflationary or disinflationary everywhere. You have retiring boomers in the United States that need to live off their investments that they've saved, the stock market. But for now, the stock market is supporting consumption. So all of the tightening that the Fed has done has not done anything to slow the wealth impact. But what it has done is it's trapped people in their houses. Anyone who has an existing mortgage at 3%, a lot of people, 20% have it even below 3%. Even if they want to move, they're trapped in their house because they don't want to trade their 3% mortgage for a 7% mortgage, which is about where mortgage rates are now. So we're seeing a slowdown in the demand for goods, an increase in the demands for services. I wonder how long this can last. We've got a collapse in trucking. Yellow went bankrupt, essentially shut down operations. The demand for trucking is falling off of a cliff, and people are flying everywhere. They're still eating out at restaurants, although we see credit card expenses start to go up. But a big one in the US is productivity is plunging like a rock. And there's numbers of reasons for that. One of them is retiring boomers are being replaced by Zoomers, Generation Z, who don't have the skill set of the boomers that are retiring. We've got a whole bunch of new memes, act your wage. And the latest one, which I just heard of a couple of weeks ago, is called the lazy girl, So, how to be a lazy girl. You want a lazy girl job. That's one that pays you a lot of money, essentially to do nothing. That's the mentality. Every generation goes through this. They think their generation had a stronger work ethic than the one before it. But I think it's pretty obvious here. We did not have lazy girl, or, when they told you to come in and you needed to work weekends to get the job done, all of a sudden, that's vanished. And decreasing productivity, paying more people to do less, guess what? That's going to cause inflation. And so did 3 massive rounds of fiscal stimulus. 2 of them were under Trump. That's what it is. One of them was under Biden. But the biggest, the third one under Biden, was bigger than the other 2 combined. And it was at a time when the economy was already recovering. We did not need that third round of fiscal stimulus at all. But here it is. And coupled with the Fed's QE, drove asset prices to the moon, creating huge economic balances in the United States that for now are still net inflationary.
Yeah, so it's a lot to take in, and it's been a lot of influences to get to this point. I guess what we've seen with the Fed doing, they've increased interest rates quite a lot. Do you think they've done the correct thing, or do you think they're sort of driving the economy into a massive recession? It sounds like with the deflationary perspective you've added, you think maybe the second.
I don't think the Fed has a good option. So far, the Fed has gotten lucky. I think the Fed has proven they don't know what they're doing. Remember, a few years back, they were struggling to produce inflation. In fact, they wanted to make up for lack of past inflation. Why so? Because they didn't count property bubbles and asset bubbles as part of what inflation was. They view houses as a capital expense. Okay, that's correct. Houses are a capital expense, not a personal expense. But what's important? What's important is inflation, not just consumer inflation. This is what's hitting China right now really hard. We have crumbling asset prices on all the money that's been squandered into homes, housing. A lot of them are collapsing. Some of them aren't even built yet. That debt still exists. No one wants to pay it back, but the asset prices don't support what's happening. They didn't call that inflation in China. They didn't call it inflation here in the United States. It very much was inflation. If and when we see a collapse of real estate prices and a stock market collapse here in the United States, guess what? I'm going to take my inflation hat off and replace it with something else. But so far, I don't see signs that that's what's happening.
It's interesting. So I guess you think that you've sort of been saying inflation is probably going to stay high for longer.
I think so. I mean, that's what I did a post on this, and there's a certain amount, not a certain amount, you can look at it as a massive amount of bias on part of the Fed, central bankers in general, to believe that their policies are working. You know, everyone seems to have bought into this soft landing here scenario now. You know, I don't, but for years, for a decade, the central bank kept saying, well, we're going to produce more. We're going to get back up to 2%. We're going to get back up to 2% inflation. They even did these studies. The New York Fed had a study up, and they surveyed consumer attitudes. Consumers expected for a decade 3% inflation or higher. But meanwhile, as the Fed economists measured it, the BLS measured it, they said inflation was 1.5%. Well, that's because they didn't factor in home prices. So this struggle to produce inflation via QE failed until the fiscal stimulus, until the free money came in. Then it all added up all together. Then the Fed got inflation it didn't want. And now its message is, oh, instead of, don't worry, we're going to get inflation back up to 2%. The Fed is now saying, don't worry, we're going to get inflation down to 2%. You know what? They were wrong for a full decade in one direction. Why do people believe that they're not going to be wrong for a full decade in the other direction? So that's how I'm looking at it. My belief right now is the Fed's ultimately going to give up and just say, you know what, we're happy with 3%. They won't say it that way, but they will act that way. And they will tolerate higher inflation just because they don't want to do the things that are necessary to bring inflation back down to 2%. They're tightening credit, and we're seeing it now here, but we're not seeing it yet in existing home prices as measured by the Case-Shiller Home Price Index, still going up. That actually surprised me. And that's despite 7% interest rates. We're starting to see gasoline prices start to tick back up. So where's that going to lead? The Fed can ignore this or not, but it's going to be a component. And we still have a shortage of jobs in some sectors, namely leisure and hospitality, where people would just prefer to do nothing, and they're still getting away with it, it seems. Some of it on the basis of money they saved up in the 3 rounds of fiscal stimulus handouts. So, those are the forces. The ECB has it worse. Europe has it worse than the United States because they've got a war in Ukraine on their back door. and that's disrupted energy prices. But both in the US and EU, they're trying to hit these ridiculous climate change goals, all of which, requires more minerals, more copper, more lithium, more imports, because we don't produce that stuff here in the United States. And also China is in control of a lot of these supplies. So to an extent, we're at the mercy of China while we're sanctioning China and have trade wars with China. And Biden has escalated the trade wars with China well beyond what Trump did himself. All of these things add costs. Biden's regulations trying to drive people towards EVs that they don't want are adding to inflation. It's a mess of cross currents here now, where demands of goods have plunged, demands of services, the money goes somewhere, right? Well, the money, people are flying around, taking their lazy girl money and spending it on services.
Yeah, it's fascinating to think about it like that. So, what does that mean for assets? I guess if this continues, then I'm guessing you're suggesting that they probably continue to go up.
Well, it all continues until it stops, right? And China hit a stop. Japan hit a stop. If we look at the policies in Japan, they were suppressing interest rates, trying to drive up inflation for the better part of 4 decades. And now interest rates are starting to get a little bit out of control. They're selling U.S. Treasury assets, trying to counter this, trying to suppress interest rates, and they've finally given up. For a decade, they've held interest rates near 0%. Well, now it's 1%. There's ramifications of that. There's ramifications to China, keep returning to its export model and property bubbles as a means of supporting growth. Both the Chinese and the Japanese have hit a brick wall in terms of what they can get away with. Interest rates are now rising in Japan, and the central bank is suddenly finding that it's no longer totally in control of what's going on. I think the US is headed for something similar, just not now. We can't say when, because we don't know when consumers throw in the towel. We don't know when the Fed, gives up on trying to produce 2%, inflation. We don't know when the irrational bubble in the stock market is going to pop. The outcomes depend on the timing. And although the outcomes are reasonably certain, we all knew that China was going to blow up. Well, we all didn't know that. Some people thought that China was going to pass the US in economic strength. Now it's in a period of deflation. So, but the terminal policy, and it's all heading for some sort of currency crisis that I can't even describe, because the Eurozone is at risk of breaking up. Japan and China are becoming unhinged, and US spending is totally 100% out of control, both military and social spending, and everyone acts like this can go on forever. It can't.
I agree. And what will you be watching? You said it's very hard to predict when this will happen, but I guess what are the sort of data points, or what are the key indicators that you'll be watching to maybe get a little bit of understanding at once these things roll over, then maybe it's time for the US to.
Thing is, I mean, it's hard to know how the economic policies that are in play right now whether or not they will even continue. For example, we've got an election coming up. And so are Biden's regulations going to continue? Is the push for EVs going to continue? Or is a Republican going to come in and undo all of that stuff with, pretty much unknown consequences here, other than, all this building towards EVs. If Trump comes in and say, guess what? We're not getting rid of the internal combustion engine. There's going to be a lot of ramifications to that, of which, I'm not sure anyone has actually figured out the consequences of this. So much does depend on policy, like, my friend said on Twitter, but he wouldn't, get into it. He wouldn't address the policy. Those are the policies, but are they going to continue or not? I don't know. I don't know who wins the next election.
And other than that, I guess, are there any other data points like sort of consumption, or I guess any other factors, looking at I guess balance of trade is probably not the best place to do.
I don't know. Yeah. I just see bubbles everywhere, and and I think they're going to pop, but I've been thinking that they were going to pop for a long time. The bubble in China has popped. That we can say, and there's consequences, but how will China fix that? So, they can fix that in a way that's beneficial for the Chinese consumer. In other words, stop hurting the Chinese consumer just to keep its export model going. Germany's in a similar position, actually. Or do they change their policies and say, okay, we're going to float the yuan, we're going to write off the bad debts, and we're going to move on. So those are the things that I'm watching. And oddly enough, we need to watch the political events to determine the economic events here, because they are so tied together. Once you get out of the did Hunter Biden do this? Did Trump do that? It's the policies that they support that matter, that are going to change things, not what Hunter Biden's son did or didn't do.
Yeah, I agree. It's really interesting to look at that. So I guess if we go to China, do you think they're going to go the way of Japan? Because I guess if you look at what happened there, they probably went the first option where they let the currency appreciate because of the strength of the economy, even though the stock market crashed and other assets prices crashed.
I think China needs some way to write down the debt. But the problem is, and it's not just China, the Japan refused to do it. The US refused to do it in 2008 and blew an even bigger bubble. We bailed out the banks, right? At consumer expense is what we did. And now we have a bigger bubble to show for it. So the interesting thing is Ben Bernanke, former Fed chair Ben Bernanke, harped on Japan. Write down the debt, write down the debt. That's the only way you're going to get out of this deflation. And then what happened when he was Fed chair and we had a debt crisis that the Fed itself sponsored with a housing bubble and cheap money everywhere? Guess what? He didn't follow his own advice, did he? He didn't allow any of the debts to be bailed off. He bailed out the banks. We produced a bigger housing bubble on top of it now. We've got a bigger equity bubble on top of it now. No one in Japan, in China, or the US wants to write off these bad debts. But they want to bail out the banks that are holding them. So from that aspect, since that's what they do, have always done, I presume they're likely to do that again. And if China does that again, it's going to roughly follow the model of China before it. And Germany, the EU, is in a similar state. Both China and the EU are ahead of the US on this. So I guess, as they say, the US is the dirtiest clean sheet, at least for now. But we're also have the biggest, most uncontrolled budget deficits at the same time. So these are the forces that we need to watch, but we're not going to know how they shake out total until we see the outcome of elections. One thing here in the United States, we've got an election every 4 years. Policies can change. In China and Japan, they can stick with, even though there's elections in Japan, they've shown that they can stick with the same policies, well, forever. And the US is really no different in some ways. We have an election, and yeah, EVs are a big part of it here in the United States, and the metals we need and the like to make that happen. I don't think the math adds up. In fact, I'm positive the math does not add up. That's part of the inflationary path that I see that we're on. But Trump can come in if he won again and undo that. So these are the things that people need to watch. And unfortunately, we cannot separate the politics from the economics of it at all, even though we can ignore the Hunter Biden stories and the pure politics of it all.
Do you think there's any risk of, I guess, if we saw what happened a few months ago with the banking crisis, do you think there's any risks of that resurfacing, or do you think it's more to do with inflation and consumption and all that?
It's absolutely going to assert itself. We just don't know when. Again, the Fed got lucky, but they did some pretty unorthodox things here. They came in, bailed out all the U.S. depositors, reneged on the foreign depositors. I'd certainly be madder than a hornet if I was a foreign depositor and lost all my money. I had money at Silicon Valley Bank. The Fed has weaponized the dollar. I don't agree with that at all. And this is part of what's given rise to the BRICS. Brazil, Russia, India, and China have nothing at all to do with each other, economically speaking. The idea that you can make some currency out of this is, well, the Eurozone is failing right now. It's proven that a monetary union without a fiscal union doesn't work. The BRICS are coming by and proposing the same thing. The reason why they're proposing this is because the U.S. has weaponized the dollar to such a massive extent. China and Russia have faced, Trump sanctions, now Biden sanctions. We got tariffs out the wazoo. So this weaponization of the dollar is aligning these forces against the U.S. It's going to matter, but there's not an easy path to get to that. You just can't take all these countries that have nothing to do with each other, merge them together, say we're going to create a brick that's going to be partially backed by gold when everyone knows it's not. It's just going to be a trading currency. None of this works. However, it is a symptom of the problem of the massive amounts of sanctions that the U.S. has on the entire rest of the world. We're so much so that sanctions are a fiscal policy. Well, that is going to backfire on the U.S. It's just not going to backfire on it in the way that all of these people think with this brick currency. That thing is going nowhere, but the underlying forces are in place for what the U.S. is doing. I'm a free market libertarian, and we don't have that anywhere. We don't have that in the U.S. We don't have that in China. We don't have that in Europe. But guess what? We have more of it actually in the U.S. than China, which is a central, command economy. The EU is bound by such a collective group of groupthink that, and they can't change any policy in the EU. The EU is bound by pretty much one size fits Germany when it comes to interest rate policy, and one size fits France when it comes to agricultural policy. Trade policies between the EU and the rest of the world have broken down for 40 years straight, for as long as the European Monetary Union has been in existence, several decades. Simply because it takes unanimous agreement in the EU, in the Eurozone, EMU, Eurozone monetary alignment to change any policies. So all of these forces are in play. The Eurozone is not safe from breaking up. China is heading into deflation. The fiscal budgets in the United States. Well, Mish, we've always had these problems. Yes, okay, but some of them are coming to a head. China and Japan right now. Europe is probably next, and we're on a totally unsustainable path for now on environmental policy that can't last. Will the next election enhance that or reverse it? We don't know.
So if and I agree with you that I think a BRICS currency is it's a bit optimistic, and there was people talking about they were going to announce it at the recent BRICS meeting, which we didn't see. But if that's not going to be the competitor to the US dollar, then what is? Because it sounds like you're suggesting there is going to be something because of the actions that they've taken. Do we know what it is? Is it going to be a fiat currency? Is it going to be a dollar-backed currency, gold-backed currency, or is it going to be something else completely different? Or are we not
100% positive it's not Bitcoin. The what happens out of the next currency crisis is uncertain, but I am certain there will be a currency crisis. But the idea that central banks are just going to give up, control over the ability to, inflate their way out of messes is a pipe dream. I would like to think that we would go back to some sort of gold standard or some sort of standard where at least we, can't inflate at will without consequences other than piling up debt that's guaranteed to implode. But I don't know what that is. I don't think anyone knows what that is. The Bitcoin advocates believe they know what it is, but I'm 100% positive they're mistaken. Now, just because they're mistaken is assuming they are mistaken. That's my opinion. Where is Bitcoin headed? We really don't know that either. If the central banks of the world acted in unison against Bitcoin, if they said, if the U.S. Treasury said, told merchants not to accept any transactions in Bitcoin, guess what? They wouldn't do it. And the same would happen elsewhere. The people tell me, well, China's tried this, other places have tried that. If the U.S. Treasury said, we're not going to, allow trading in Bitcoin, no one's going to take your Bitcoin away from you. So that's not going to happen. You can have your Bitcoin. Try converting it to US dollars to buy something. You want to sell that Bitcoin to buy a car? How are you going to do that if the US Treasury says you can't? You can't take your Bitcoin and go barter that for a car. You can't buy a house with it. You've got your Bitcoin. But if you can't convert it to fiat, if no one will convert your Bitcoin to fiat, what is it worth? It's worth precisely $0.0, except some trivial amount for what you can do direct barter with. Now, people think Bitcoin, now that's what I just said is actually a statement of fact. The Bitcoin advocates refuse to believe it. Now, it's a statement of fact, but that doesn't mean it happens. So my mistake, if you want one from me, is actually thinking that it would happen by now. And we're actually seeing more of a little bit of a hands off. And certainly the SEC chairman Gensler has made a complete fool out of himself with how he's proposing to regulate Bitcoin and all the cryptocurrencies in general. But if push comes to shove, if central banks and governments are threatened by Bitcoin, they will squash it, and they can. So the question is, will we get to that point or not? And what would it take? And I don't know. I don't know the answer to that. Would 100,000 do it? Would 1 million do it? Can it even get to those heights? I don't know that either. So I've got an open mind on this, except for one point. And that one point is that central banks are just not going to go along with the idea that Bitcoin is going to replace the dollar, the yen, the yuan, or anything else. It's just not going to happen.
Yeah, I agree. And I think the SEC recently told Coinbase to stop trading everything but Bitcoin. So they're already getting rid of everything else. And then that just leaves them easy target Bitcoin to get rid of them when they want to as well. But yeah, it's been a really interesting conversation. So, Mish, thanks so much for your time. I really appreciate it. My last question is, what is one message you like people to take away from our conversation?
Wow, the key takeaway, I think, and I didn't even plan this in advance, is that the politics of some of the next elections are actually going to determine what's going to happen on an economic front, especially with environmental policy in the U.S. and in Europe. Are we going to march down this path where we're dependent more and more and more on China for minerals? Or do we back off and say, hey, guess what? This march towards EV is happening faster than we can handle it. We need too many minerals. We don't have the access to those minerals. I think we need to take a step back and look at that. But ultimately, down the road, we'll see. I think we're on the brink of an economic crisis caused by the political consequences of a push too fast, too far, on too many fronts, for too many things that aren't unsustainable. Meanwhile, military spending in the U.S. keeps growing. Social spending still keeps growing. No one wants to tackle the deficit. And we have this additional problem of needing massive amounts of minerals from China on top of it all to make it all work. It doesn't fit.
Yeah, I agree. So thank you so much for your time today. I really appreciate it. We've mentioned MishTalk, which is sort of your website where you post some really good economic sort of posts. Is there anywhere else people can find the work and what you do?
You can follow me at MishTalk.com, and you can follow me on Twitter at MishGEA. The GEA stands for Global Economic Analysis. Someone had already taken the Twitter handle Mish, so I had to choose something else. My original blog was called Mish's Global Economic Trend Analysis, thus the Mish GEA. So follow me on Twitter at MishGEA or on MishTalk.com. Thanks.
Perfect. I'll put that on the description below, but thanks again for your time. Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.